So if you're thinking about becoming a mortgage broker, you probably want to know how mortgage brokers actually make money. That's a very valid question. It's completely relevant to ask that. And that's what I'll unpack in this deep dive video today. This is going to be a long one. So strap in for this one because we're going to talk about how brokers make the money. Okay, we'll talk about the different commission types, employed, self-employed. There's so much stuff. I've got tons of notes all over my computer. This is definitely not some sort of glossy, glamorous video. I'm just going to talk to you and give you the real facts, the raw information about this so that you can make a real informed decision about, one, whether this is the right career for you and which route you should go down. Do you go self-employed? Do you go employed? And also how you can navigate if someone does offer you, you know where the money is coming in. Because a lot of times there is money that you didn't realize and the opportunities, maybe your employer or someone else is siphoning it away from you. So this is what we're going to unpack in this video. Let's dive straight into the very first way of making money. So the biggest elephant we need to talk about in the room is the first one, which is the lender commission themselves. How do you actually get paid from lenders themselves? Now, lender commission is an interesting one. What you actually get paid is what is known as a proculation fee, a proc fee. Not a commission. So in our industry, I don't know why they do it. I do know it's regulation, but you'll realize the more you go into this industry that regulation is a pain in the backside for all of this stuff. And proculation fee is how you make money from you as a mortgage broker. Now, that's how you make money from it as a lender. Now, normally your proc fees, let's going to take my dyslexic writing here. Your proc fee is going to be about 0.4% of the loan. Normally. So it's normally going to be about 0.4% of the loan. It could be, depending on the commissions, it could just be 0.35%. It could even be 0.3%, but it's always going to be of the loan itself. It's going to be around that. Now that is, if we think about commissions as a broker, that's that basic commission level. That's what you're going to get paid for every single thing. So for every single loan you do, that's kind of how it works. Now, some are going to differ. Some of them might be a little bit higher. They might go up to 0.5, depending on like complexity of it, meaning things like buy to let can sometimes be higher, 0.45, 0.5. But most of the time, it's going to be between that 0.3 and 0.4. Probably 0.35 is probably going to be the best range you can think about. Now, when we think about that, that's going to be on every single mortgage you do. Now, I am not good with numbers, so I'll let you do the numbers on that. But think about that. When someone talks about they do $1 million in lending, what that is, if you want to work out how much money they brought into the business, you just get 0.4% of that $1 million in lending, and you're going to end up with that figure. That's how you do it. This is the standard fee here. It's a bit low, I'm not going to lie, and you'll see why you need other income streams, which we're going to unpack in this one. But you're going to see why you need other income streams in order to make money from this. So that's going to be your standard prop, because really it's not that much. If you think about it that way, it's really not a lot. And depending on geographically where you are, if you've got big mortgages, you can get about £1,000, £1,200 proc fee, which is pretty decent. But if you're northeast, anything like that, which a lot of my clients are, your proc fees are not going to be massively big. If you've got 150 to 200 grand mortgages, they're okay. 100 to 200,000, they're good. But like, if you're the southeast, you're going to be getting 300, 400, 500 grand mortgages. They make a big difference. So your prop fees alone are not what you're going to be able to live on, but that's roughly what they're going to be. Which brings us on to the next bit. The next bit we have is broker fees. So for broker fees is the money that you charge to give advice. Now, some people do free, some people don't give it broker fees. It's a whole thing with this. My advice to you, by the way, is always charge a broker fee, really, nearly always. There's certain situations where it's not needed, but in all cases, you should charge a broker fee. Now, a broker fee is not to be confused with a proc fee. So the way that it works, let me see if I can draw a little diagram on this one to make it work. When you do mortgages, there's three parts. So if you think you've got the client here, let's draw a little stick man. This is the client. Then you have the lender here. So if we put another stick man, don't know why that stick man's much bigger, but let's say that's the lender. And then you're in the middle, and you're the broker, obviously. Broker, which is middleman. It's kind of straightforward, yeah? So that's what this is. Now, interestingly, the proc fee that we get paid, that is paid by the lender. So the proc is paid by the lender to the broker to act on their behalf. That's what's done there. So the proculation fee, that commission from the lender, is paid to the broker to act on the broker's behalf in order to kind of fill out all of the paperwork, to take on the compliance and the regulation and the risk, okay? So that is paid by them. But the client pays the broker a fee in order to act on their behalf as well. So This is where people get wrong. If you think about it this way, the client is paying a broker fee in order for the broker to source the market, look at all the deals, do everything like that. Their job is to source those deals, get the best possible deal. And then from there, what interestingly happens is that then once they found the deal, then the broker works with the lender, as we see here, in order to then take on their risk. Because if you think about it this way, if a lender went direct, they have to pay someone's salary, they have to pay someone to do that. Whereas with it's easier to pay 0.4% to a broker than it is to and let them take all the risk and all the responsibility than it is for them to have someone hide in, which is why there's less employed bank roles anymore and more intermediary roles. That's what it is. But that's not to be confused for the fee, because if we don't have a fee, well, the big question mark we have here, the massive one, is who do you work for? Okay? Because who do you work for is a big, big question. Massive question. Because if there's no fee, the broker, effectively, let's not kid ourselves, if the broker's only making money from the lender, that's where the money's going to be. Because the money's going to come from that, not from the actual client. So nearly always, you should be charging a broker fee and you work on behalf of the client first, and then you're working as effectively the administrative implementation of the mortgage once the mortgage product has been picked. So you're a broker for the client, you're effectively administrator for the lender, and your risk mitigation to them. And that's why they pay you a prop fee and the client pays you a broker fee. The client pays you to act independently on their behalf. The lender then pays you in order to you to get paid for doing the admin and taking the risk. They're not the same thing. And people get that very, very confused. And it drives me mad because people do. And they'll go, oh, well, I get paid by the lender. No, you don't. You get paid by the lender to do something different. Okay, so that's really important you do. Now, what is the average type of fees for these? Well, the average broker fees, they're going to be about £495 to £99, roughly, is going to be the average. Lower end, you might see, say, £295. So you might see a £295-ish. And on the upper end, you're going to see anything up to about £995-ish. Roughly. That's probably £495 as well. I've put £499 there, but £495. Just keep those numbers. That's going to be the kind of range that you're going to get from as regards to a fee. You also, in an ideal world, would do what we call a split fee. So a split fee is what I teach in my brokering, and it's the best type of fee to do. It's the best from a behavioral psychology standpoint. It's the best from the client standpoint. It's just much easier. Well, let's say we take that 495 as the best one. You would have a 695 fee on app, 695. Sorry, 165. Sorry, not on offer, and then 165 on completion. That would be what we call a split fee. That's the split fee we talk about here. That's what that is, and that would mean that the client pays when the work is done, and that's what you say to the client. You don't say I charge 495. You say, look, I charge for the work, I charge for what I do when I do it. So I charge £165 on application, £165 on offer, and £165 on completion. The clients will be absolutely fine with that. No one has a problem with it. It seems significantly cheaper than £495 because it is in their mind. They're working from like purchase. What's the word? They're working from like monthly payments. So that's where even if you're at if you were looking at something like that with the higher fees, if you were doing really, really well, you want to do a higher fee. Let's say you did the 995. Well, divide that by 3, and straight away that would just be 331, 331, 331. It's kind of that roughly. So let's say you just do 330, 330, 330. That would be your fee that you could charge, and the clients would most likely, if you've got enough reputation and skill, would say yes, that's fine. There's a lot cheaper in the client's mind than saying it's £1,000. And so that's how fees work, and that's where the broker fees come in. You should be charging broker fees on every single one, except on what is known as a product transfer, which is where effectively the client comes in and just transfers the product to another product with the same lender. Requires very little effort for you. Your proc fees on that, by the way, are normally half of whatever the lender does, and so that normally I wouldn't charge for that. But outside of that, they're your fees. You might get more money for complex ones. You might get more money for things that, personally, in my opinion, the best type of fees is just a very straightforward standardized fee. Which then brings us to the next one, protection income. Oh, my favorite. Protection income is the one that I'm the most passionate about, because listen up, guys, with this one, because if you want to make money, you want to have life-changing money in your business as a broker, this is the one. This is how you do it, protection income. So protection income comes from a few things. Selling protection is you're selling a few products. What you have is you have life insurance, you have critical illness cover, you have income protection, and you have what we call family income benefit. Okay, so these are your protections. Oh, my spelling is horrendous. Okay, these are your protections. Okay, so this is it. You got life insurance, critical illness cover, family income protection, and family income benefit. Those are the three types of insurances that you have. Now, life insurance pays a lump sum if the client was to pass away. Critical illness pays a lump sum if they were diagnosed with a serious illness. Income protection pays a monthly income if you are diagnosed with if you're unable to work due to illness or injury. And family income benefit pays a monthly income if you were to pass away or one of your family members was to pass away, as in you or your partner. That's what that does. Now, you need all of these to what we call a full solution. With the mortgage, that protects it. If you think about with a mortgage, when someone takes on a mortgage, it's a significant debt. So with a significant debt comes a significant risk. And so it is your job as mortgage advisors is to eliminate that risk wherever possible. And so not selling protection is it's not just bad, it's awful. You shouldn't be in the job, in my opinion. People who watch this, my viewers, guys, I love you to bits. I make this content for free. I pump a lot of time and effort into this to hopefully give you the best advice you can so you can hit the industry and do it well. This is what you need to do is sell protection. You sell it ethically and I'm going to do more deep dive videos on how to do that, because that's not this video today, it's how money. So we're going to talk about the money of these, because this is where it gets tasty. Now, when it comes to protection, what's really interesting with protection is you normally get paid, and I'll bring this up in a minute on the whiteboard, but you normally get paid a percentage or like a multiple, everyone does it differently. They do percentages and stuff. I do it as multiples. So you get paid a multiple of the insurance premium. So let's say if somebody is on here and somebody decides it takes a £50 premium. So that's going to be £50 per month is what they would take. Okay, let's say they take that, and that would be a bit of insurance. Now, truthfully, ideally what we would be looking for here is about 100 to 200 is what my kind of clients I work with, that's their kind of per month kind of average client for these. But for you right now, like 50 is great, go for 50. I'm happy with that. So, but with 50, we do for numbers. Now, £50 a month isn't very hard if you're looking at those life insurance, critical illness. It's not that hard from those, to be honest. Now, let's look at 50 a month. What would we get for that? Well, I'll give you the kind of income multiples on this. Now, these will range depending on your provider, your network, but I'm here for full transparency. Let's show you what most people are going to get, meaning the top end of the business, what's actually being made. However your splits are divided by your employers, whatever you have on your deal, that's up to you. That's up to them. And remember with that, they're not stealing money for you. They have to run a business, but it's just important because there are certain networks out there that take much bigger cuts and ARs and RIs and all this type of thing. But let's just give you what you would make if you went self-employed under your own, what you'd roughly make. And what you'd roughly make on that is this is normally times either between 21 to 24 times the premium. So if we were doing 50, we do 50 times 21, that's going to be about £1,050 up to about 50 times 24 is going to be around £1,200. So a £50 a month policy is going to make you around about £1,200 roughly, top end £1,200. Now, where this gets exciting, let's take the average client of mine. Let's say that they average to get 150, because that's really, let's do in the middle between those. Well, if you're doing that times 24, well, that's going to start being like £3,600 per client, per case. So you can see, hopefully, this is where this stuff gets really exciting. Really, really exciting, because we now start to make a lot more money from insurance policies, a lot more. Now, if you're doing, depending on how many clients you have, but if you're getting 4 or 5 clients, let's say you're doing, as a new advisor, you're doing, say, 5 to 6 clients a month, and you can get that to even just half of them taking it. Let's say it's 6 and you get half of them. If you can get 3 of them and they take it, even just at £50, let's say it's £1,000, you'd be making an extra $3,000. You make an extra $3,000 on commissions, of insurance commissions, just on that. So if we times that by 12, you're going to make an extra 36k just from selling £350 a month policies to your clients. It's not that much. Now, if you can see this, and this is why when I work with people with my one-to-one coaching, it's how we can get them to like 150, 200, 250 to even 300. Some of the clients much higher than that. But you can see how you can get past that kind of 200,000 mark quite easily if you start getting into those 100,000, 200 pound, 200 pound premiums, and you start having a higher volume of clients. You'd only need to have, let's say, if you were doing that, those 6 cases, but you sold 3 of them at 150, well, now quite easily you're getting a commissions there. You're already hitting, £10,800 for 3 cases. So that again times 12 is you're already at 130,000 before we put any proc fee on there, before we put any mortgage fees on there. You're already there, which realistically, to be honest, at that case, yes, probably a 200 grand income already. So you see how this is quite important, the amount of money you can make. Now, I will stress with this is not the case when you're employed, because when you're employed, they're going to take a lot of money from you. It's just the nature of the beast, which I'll talk about. I think it's on here is what we talk about in this one. But yeah, I've got self-employed and employed earnings. We'll unpack that later, so stick around for that. I've got my notes of what I've got to talk about so I stay on target. Otherwise, I'll go too off. So that's what a protection income is going to be. So now let's have a look at what we'd say the average deal size would be, typically speaking. So if we did the average, say 150k mortgage, that's what we charge there. So that's 150k loan. The proc on that would be about £600. Okay, so the proc on that would be about £600 proc. If we looked at that on top of that, let's say that person, then we charge them a 495 fee. So we'd have 495 fee. And then let's say they took £50 a month. So it'd be 50 per month protection, which would be about, we said about 1,050. Let's do that, 1,050. You can quite easily see there, that would be around £2,145 case size. Now, if you get those times 3 out of that 6, let's do that times 3. You're looking there, that would be in total, just for those 3 cases, would be about £6,435 a month. And so what you'd get there is, if we did that, that's just 3 cases, times that by 12, that's about 77, not 33, 77-ish, just over 77K would be what you could make on the average. Instead of the average deal sizes, that's where you can see that's just 3 cases a month if they took £50 a month on average with a loan of around 150 and did the fee. 3 cases, that's all. 3 only. That's insane. So this is why I say that's a good amount. Now, if you were doing another few of those that didn't have protection as well, that's easily going to hit 100k quite easily. So but the average case size for this to work, this average case needs to be over 2k, has to be over 2k. You're going to see my dyslexia here as my ADHD brain as well, how it becomes really messy. But it needs to be over 2k, your average case size. Now, what you will see when you speak to many people in the industry is they'll have an average case size of like 800, 900 pounds, and that's because they're not selling insurances, or they're selling £10 a month premiums or rubbish like that. Or they've got lower loans, which is fine, but the lower loans still doesn't impact you that much because they still have protection needs. They still have higher incomes, and your insurances, that life insurance, critical illness cover, IP, all that stuff, it's based off of about 5% of your household income, not based on the amount of money, the mortgage size you have, because you need to protect the income, you need to protect the person, which is the income, which is the lifestyle, not protect the house. Big mistake people make. So you'll still be making £1,000 on your commissions at £50 a month. You'd still be making that as no matter where you are in the country. My fun fact with me, my biggest writer, the number one writer in my business, in my coaching kind of roster that I have, writes like significant. He's number one in his network, which is no blinding feat. He's the biggest writer in the entire network he's in. He's based in Rochdale. So he's based in Rochdale, which is like a northern town around Manchester way. he always talks about this. He is the biggest writer. He makes the most money of any client I've ever worked with from where he works. The second one was based in Middlesbrough. Okay, and she, again, was the biggest writer. So geographic location has very little to do with it. Guess what, though? The two of them are absolute weapons at selling insurance. They're so good at it. That's where the money is. That's also where the real service to the client is. It's not about the money. It's about the service. If you do the right thing for the client, you'll get paid a lot of money. Selling somebody a mortgage without actually giving them insurance is just a reckless and stupid thing to do. And that's what I want you to understand. You know, to sell it to them, it sells itself. And there's tons of content I have on how to sell it, so you can check that out. But this is literally what I'm talking about here, is what I to do in my coaching to try and help people get that. But average case size, my personal opinion, industry is going to be different. $2,000 average case size pretty easily is a very easy benchmark for most people. You should be hitting around 2K per one. Obviously, they're going to differ, but average case value about 2K. So now let's talk about what the kind of typical monthly deal volume would be. So the deal volume, in my opinion, is depending on where you start. If you're employed and you're going to be provided leads, if you're employed, I would say you're probably looking at around 8 to 10 per month. All right. That's what I would say. It would be your employed kind of status. If you're self-employed, so let's do SE just for ease, I would probably say your new advisor, roughly 3 to 5 is going to be there. Eventually working your way up to 8 to 10. But remember, you're not going to reach that 8 to 10 goal at the beginning. You know, like it's if you're self-employed and you're not being provided any leads, that's going to take a while to get there. And so what you need to get really good at is being able to make the most out of what you have, the insurance cases and things like that. So that's what you can do. But typically, I'd say employed roles, they're going to give you more leads than self-employed roles because they've got the leads coming in. And I know that when I worked at Connells, I was a Connells advisor for many years, and you know they had a client bank, and they had people at the front who would put appointments in. They had a team in the head office that would book appointments in for reoccurring clients, for repeat business. It was like a machine. And so to not do kind of 8 to 10 was pretty unheard of, unless you had a new branch and you walked into a new branch, which was always awful if you were that broker that got that new branch. But that's kind of where that sits. Self-employed, though, completely different. And I would say at the beginning, you're trying to go for that 3. If you can get 3 a month, great. Then aim to like 4, like 1 a week, and then to about 5. And truthfully, if you can hit to about 5, you can make a really good living and have a phenomenal lifestyle business off of 5 mortgages a month very easily. And a lot of my clients who I work with are in that kind of 5 to kind of 8 range. Some of them are much higher than that, but majority of them are around 5 to 8 when I meet them. And they do very, very well. And so can you. So I would say that's a realistic number. You'll hear unrealistic numbers, people telling you they're doing 20 a month and stuff. There are people who do. I do know clients who have that, but there's very few. It's few and far between. Those figures are very often inflated. And what I want to tell you is I'm going to tell you where the figures are higher, where people say they're lower, and I'll tell you where they're lower, where people tell you they're higher. And most of the time it's that. People will tell you that it's impossible to get insurance and the average case size is low, which is just not true, but they'll also tell you that they're having millions of leads, and the two things don't really stack up together if you think about it. So that's kind of the average case volume, I would say, sits around there, which then brings us quite nicely into the employed versus self-employed earning potential, because there is a big difference in this. So this one's an interesting one. I've been on both sides of the fence for this, as I've worked in both camps, and let's unpack it a little bit deeper. So I reckon for self-employed, and this is an interesting one here, with self-employed, you're going to earn a lot of money in self-employed. It's quite easy. If you're good, you can earn a lot of money. If you're not good, you can still earn pretty decent income. But I would say that if we've already kind of looked at that, realistically, 100K self-employed is very doable nowadays after about 2 years. So in your first year, probably not, but after about 2 years, 100K self-employed income it's incredibly doable. And I would say that if with coaching and development, you're probably looking at kind of 150 to 250 with real coaching and development is like self-employed income. So effectively, you know, you're relatively good at the job. You're not being optimized, or you've gone through any kind of coaching program like myself. You're probably going to hit about 100K. You might go more than that, but you can do that on your own quite easily. But with the optimization, you can do, you know, 150, 250 is where I see the majority of people. I'll put plus on the end because there are clients who do go higher than that. But my personal opinion is I think 250 seems to be where it bottles. It kind of tops out unless you've got a very specific situation. But that's 250, probably working about 35 hours a week, maybe. Max, I reckon, on that. So that's pretty good, like, no, it's pretty good, bloody great. Now, employed is different, okay? I would say when you come in employed, you'll kind of come on around a basic salary. Bear in mind you're new advisors here, so you're new broker, of around 18 to 20K might be your basic in like a Connell's place. This could go up to about 25 if you're going to go work at a like a more of an independent, maybe, but the kind of 6.5 does another. Independents usually have less leads. Connell's has a lot more leads, a lot better training. Independent training is really useless. It's really bad. I love independents. I work with them, but their training is awful because I'm the guy that's going to train them because they're not very good. They need the training. Like Connell's, Countrywide, L&C, Just Mortgages, these larger companies, they're gonna, they're not great by any stretch of the imagination. They have their problems, but they are also very what is the word? They have a lot of leads and their training is very good. So you can make good money or relatively good money, but you will work very hard. Now your commissions on this is normally going to be anywhere from about 12 to 18%-ish. And these are going to change all the time, but around 12 to 18% is what you normally get. It could go up to 25%, maybe. At a push, 25%. You're going to just not see that. So at a push, 25%. But around 12 to 18% of the cases you write. You may even have what we call a buy-in. So you might have a buy-in, and that buy-in might be your salary. So let's say if it was 20K, the buy-in of your salary would be that you'd have to do, let's say it's 20,000 divided by 12. You would have to earn, if it was a buy-in salary, that'd be £1,666 before banked. And once you bank that, you would then make your commission on top. So that's quite common, not in the large corporate companies. That's not common in the large corporate companies, but it's large in the independent. It's quite common in the independents, which is that you need to bank your salary. It can also be, that could even be about 2K, because it might be salary plus like your national insurance contributions and stuff. So you might have to bank about 24 grand before you then get paid your 12 to 18 to 25, whatever it may be, percentage on top. Like you wouldn't, that first 2,000 is not, there's no commission on that. That's quite a common thing, by the way. It is pretty common for that to happen. And the reason why that happens like that is because they want to kind of hedge their bets. You might also, though, with employed roles, you will, in large corporate companies, you might also get like a company car allowance or a company car, depending on what the role is. And so if that's the case, that could be anywhere from £100 to £150 a month, maybe up to £200 a month. It's not massive amounts, but it can add up. So with that, what's really interesting then with the commissions is for most advisors, I would say if you're realistic, this one I think normally totals out at about 40, kind of 60K. You can go above that, but it's very hard if you're outside of London. If you're in London or the kind of surrounding counties, Kent, Essex, I worked in Essex, I worked in Hertfordshire, and I worked in Cambridge. So that would, in some areas, the kind of 60K plus, it would have been the case. But for most of the time, 40 to 60 is about right. These employed roles are usually designed to stop you from going up. And that's because they want to make the money. That's completely normal. So what you normally find is people would be employed first, they get their training, they earn their money, they get paid, and then they might go self-employed later. You can probably see the self-employed earning potential is significantly higher. Like it's not even close. It's significantly higher. So if it's an income and a lifestyle thing, it's huge. It's absolutely huge. Okay. That it's one of the biggest things you need to be aware of. I think that also the big thing to point out between those as well is work-life balance. For self-employed, from a fair amount of self-employed, I said that's about 35 hours max. This is probably going to be about 40 to even 60 hours. And that sounds like a lot. And you go, no, that's illegal. They make you sign a documentation a lot of the time in these corporate companies that says you're happy to work outside of them. And they use tactics to make you feel inferior if you don't, so it is like that. It is a little bit black hat, it is a bit not great, but to be aware of it, I think for me, I went in there, did 2 years there, I trained, and then I went off. It worked, it's good, it works for the right people, but that's realistically what it's going to be. So that's a deep dive into how money is actually earned as a mortgage broker. That's probably a lot clearer, hopefully, than than before. It is a lot of information there. If there's any questions you have on it though, please use the comment section in this video to ask those questions. I'm very happy to answer those questions. Now you got to the end of the video. Anything you're not sure about, please ask me. I'm happy to answer them. If it's a question that I think needs another video, I'll make a video on it as well. So please do just throw it in there. And I'll be more than happy to answer your questions. And feel free to reach out to me on Instagram. That's Ash, @AshBorland on Instagram. And yeah, see you in the next video.